Hello students, Assalamu alaikum. Today we are going to solve, uh, I'm sorry, A2 accounts paper. There are 6 questions in this paper, and the paper pattern for 2023 has been changed. Now they have 2 papers, one for financial accounting and one for cost accounting. And I think this is the last combined paper in A levels. So here is your paper. Now, this is the question paper. June 2022, paper 32. 3 hours paper. Now this has been changed by Cambridge, and now you have financial accounting and cost accounting paper. Okay. Now, question number 1: accounting for non-profit organization. This was if you have taken accounts in O levels, you must have done this question, income and expenditure account in your O levels. But the standard of that question was a little low. But here the standard has changed. The problem has changed. But the basics are same. Okay. MN Drama Club was formed in 2017 with the objective of promoting modern performances. The treasurer of the club resigned on 31st December 2021. The chairman prepared a draft income and expenditure account which was based on the receipt and payment account. Draft income and expenditure account for the year 31st December 2021, subscription, tuition fees, ticket income from performances, donations, expenses for performance, office equipment, first payment, administrative expenses, heating and lighting, building extension, building maintenance, deficit for the year 7,000. The draft income and expenditure account had been presented to a member of the club who is an accountant. Okay. Now, what he did, he has taken all these figures from cash book. In commercial organizations, we call it cash book. In non-profit organization, we call it receipt and payment account. Payment account means cash book. So, income and expenditure account, I'm sorry. Income and expenditure account is not based on cash book, actually. Okay. So, what we have to do, we have to redraft this income and expenditure account. That would be the requirement of the question. Okay. Now, this is the information given. Okay. State 2 reasons why a club needs to have a clear objective. Now, I must tell you, clubs and societies are made to promote something in common, something for the benefits of the member, something for the betterment of the member, for the some sports activities or sometimes learning activities, festivals, restaurants. These objectives are just to provide members refreshment or certain activities or wealth or education or health or whatever. There are so many things for clubs and societies. So we need a clear objective. Objectives gives us direction. Okay. So this is the answer you can write in. That's 2 marks. Acha, explain how the tuition fees of $8,000 should be treated in the revised financial statement of MN Drama Club. Support your answers with reference to the relevant accounting concept. When we talk about revenues and expenses, there are 2 concepts available in accounting, and they are called sister concepts. First is matching principle and the accrual concept. Both are sister concepts. If you mention matching principle only, that would be okay. If you mention accrual concept only, that is also okay. Now, so I've told you the concept, but here, what I have to do, what we have to do, we have to work on what amount of fees, $8,000. So what was happening with the tuition fees? Let me check. I think it's given in question information 1. Yes. Now here. A tuition fee of $400 covering from period from 1st October 2021 to 31st May 2020. Achha. We are standing on December 31st, 2021. So this means this fees, which we have covered from tuition fees, $400, is covering October, November, December, 3 months in this year, January, February, March, April, May, 4 months in October, November, December, 3 months in 2021, January, February, March, April, May, 8 months, January, February, March, April, 8 months total, and 5 months in 2022. So that tuition fee which we have recovered from the students, this tuition fee, we are going to add 3 months for 2021 because we have earned in 2021 and 5 months in 2022. So that would be treated as prepaid revenue. 5 months for 5 months. So 400 and how many students there? 20 children. Here it is, a maximum of 20 children. So that means 400 by 20 makes 8,000. 8,000 divided by 8. So it means 1,000 per month. 1,000 per month for 8 months. 3 months in 2021 means 3,000. Simple. Okay. So in this income and expenditure this year in 2021, at the end of 2021, when we are making income and expenditure account, we have to take how much? 3,000 as tuition fees, which is earned during this year. The remaining 5,000 out of 8,000 will be earned in 2022. But what this person has done, he has taken all the tuition fee because this was based on cash inflow and cash outflow. So because he has made this on, so we'll take tuition fees only 3,000. 5,000 will be reported in the balance sheet as a liability. Okay, all revenues received in advance are liabilities, current liabilities. So this is based on accrual concept. Are you getting it? Or matching principle? Whatever you mention. If you mention both, it's okay. If you mention any one of them, because these are sister concepts. Okay. Now, the 12 marks question was prepare a revised income and expenditure account for the year 31st December 2022. So for that very purpose, we have to be very much careful. Now, take this subscription, 40,400. We have to work on that subscription. 40,400. First of all. Okay, we'll report that in our answer, but we have to work on that subscription. Subscription is revenue. Okay. Anything? See, the problem is if we go to the adjustment or additional information, what we find here? We find number of members paid in advance. Okay. Number of members paid in advance. Number of members in areas. So we should know actually what members are paying the annual subscription, which is not given in the question. But in given, which is not given in the income statement, but we'll find out somewhere. Okay. See, student membership fees of $100, which is 1/3 of an ordinary member subscription. Okay. So it means if it is 1/3, $100. So total would be $300 per adult member. Okay. So we have come to know 300 per adult member. Now, student membership fees paid by children are included in the subscription in the draft income and expenditure account. Okay. So we don't need to bother about the students' membership. Okay. Now, see. Here, they have not mentioned that these members who have not paid are not adults. So it will take them as an adult member. Achha. The formula for calculating actual subscription earned or earned by the club. What we have to do? We have to take the amount of subscription received. Where we are. Okay. 40,400. Okay. 40,400 subscription received. Okay. Then what we have to do? We have to add prepaid at the start of the year. That is 9 members. 9 multiplied by 300, 2,700. We'll add. Less prepaid at start. Prepaid at end. This one. So this is 0. Leave it. Okay. Now, arrears at start. 4 members. We have to deduct. 4 is a 12. 1,200 we have to deduct. And arrears at end we have to add. 24 members. 24 by 3 is 7,200. 49,100 is subscription we have to report in our income and expenditure account. 49,100. Again, repeating formula. Subscription received, add prepaid at start, less prepaid at end, less accrued at start, add accrued at end. And you will get the actual amount of subscription the club has earned in the year. So we are going to report it here. Subscription. $49,100. Getting my point clear? Okay. Now come to the second source. Tuition fees. This one. Okay. I'm deleting this. Now, this 8,000 we've already discussed that we'll take 3,000 tuition fees. Getting my point clear? So, tuition fees, 3,000. Oh, what I forgot to wear my glasses. Okay. Tuition fees, 3,000. Got it? Okay. Now, next. Ticket income and performances. There is no adjustment given for that. Ticket income and performance. Nothing. Okay. Now, so we are going to report it as it is. 14,200 with the name ticket income and performances. Ticket income and performances. 14,200. Done? Okay. Now come to this donation. Okay. Donations, generally, they are not included in income statement. During the year, a member donated 7,500, which is to be used to sponsor the club's participation in a national event for the coming 5 years. So this is part of equity. It will be reported as special fund in balance sheet, along with accumulated fund. Okay, donation, because this is a long-term investment type. Okay, now, so we have to add only 3 items here. So we will add only 3 items. Okay, and after adding 3 items, what we get here? 49,100 plus 3,000 plus 14,200. 66,300 is 66,300. Okay. Now heading expenditures. Okay. Come to the question. Okay. Expenses for performance, 11,500. There was no adjustment. So we'll write it over here. Expenses for performance, 11,500. Expenses. Expenses for performance. $11,000. Done? Okay. What next? Office equipment. Whatever the amount we are paying to buy any non-current asset, that amount, that purchase price of non-current asset, we never include, never, whether we are paying installment basis or we are paying directly, total amount that is not going to be added in office equipment, in income and expenditure account or commercially income statement, we don't. We only add depreciation of all the non-current asset in income and expenditure. Whatever we have paid for them, we don't include in income and expenditure. Okay, so leave it. So what we have to do, we have to go for the depreciation of these office equipment, not this amount. Okay. Now, so come to depreciation. Okay. How many current assets are there? We'll find it in the adjustment. Okay. Now, see. Building costs $200,000. Accumulated depreciation is given. We have to calculate depreciation using straight line method. Okay. And, okay. So 10%. A full year's depreciation charge in the year of purchase of asset. Okay. An item of office equipment was purchased on credit during the year. That was about office equipment. So I think we do not have any change in the amount of building or any revaluation of building is done. What we have to do, just we have to calculate depreciation of building. Was there anything else related to building? Okay, yes. Building extension is 16,000 plus the cost of building here is given 200. So 216,000 multiplied by 10%. That is 21,600 would be the amount of depreciation we have to record for building. Depreciation. Building. That is 21,600. 21,600. Okay. And now depreciation for office equipment. See what's happening in for equipment. Cost is 120,000. Okay. An item of office equipment purchased on credit during the year, the debt was repayable in 3 equal installment interval of 4 months with the first payment made in October 2021. We have added our equipment with that was purchased on credit. Okay. Okay. Now the thing is, office equipment was how much? 120,000. Plus, we have bought a new equipment, and that was to be paid in 3 equal installment of 4 months. So, have you paid any installment during the year? Yes, 2,000. This is the installment. So 2,000 by 3 means 6,000. So new equipment cost is 6,000. Total 126,000, the value of equipment minus 85,000, the previous provision, 41,000 book value multiplied by 20%. The answer is 8,200 depreciation. Okay. 8,000 depreciation. Never include the payment of non-current asset in income. We only include depreciation. Okay, what else? Next is in income and expenditure account. Administrative expenses. Okay. Administrative expenses, 30,100. We have to go for any adjustment. Administrative expense. Okay, other prepaid and accrued expenses at 31st December 2021 and 31st December 2022 are as follows. Okay. Administrative expense, we have accrued. We don't have prepaid. So what we have to do, we have to add accrued at end and we have to less accrued at start. Okay. So what was the amount of total? 30,100. Okay. 30,100 plus accrued at end 9,000 minus accrued at start 6,200. So that is total 32,900. Okay. Administrative expense 32,900. 32,900. Okay. What next? Okay. Heat and lighting 13,200. Okay. 13,200. And we have to I'm sorry. What about we have accrued at start, so we have to minus 1,500, and we have prepaid at end, so we have to minus that also 700. So 11,000 is going to be heating and lighting. Heating and lighting. How much? That was 11,000. Okay. What next? Okay. Building extension, again, value of any non-current asset is not going to be included in income and expenditure account. We only add the depreciation. We have taken depreciation of the 16,000 also. Building maintenance 4,600, and I don't think so. Okay, we have any adjustment for that. So let me check. No. Building maintenance 4,600. Okay. So when we get the total here, total expenditures, we report in this column. $11,500 plus 21,600 plus 8,200 plus 32,900 plus 11,000 plus 4,600, 89,800. $89,800. And deficit would be, yes, surely deficit. How much? 89,800 minus 66,000. 23,500 is the amount of deficit. 23,500 deficit. Done? 12 marks question, mashallah. Okay. Now again, move to the next part, C. The chairman has received many requests from local parents for the tutorial classes because the fee charged by the club is 50% lower than other organizations. He has a plan to admit 60 students in October 2022. To increase the capacity, he estimates that an expenditure of $30,000 would be incurred in an extension of club's building. Advise the chairman whether or not should be carried out the plan. Justify your answer. Now, things. If we admit 60 students, yes, that would increase the goodwill of the club. That is beneficial for the members. That would be very helpful. But again, we have to incur $30,000. So we have to go to ask either we have to increase the tuition fees or we have to increase the subscription fees or we have to arrange for the donations. So there are both sides we have to be. It might be possible that if we have 60 students, we won't get good teachers. So there are so many things we can write over here. Okay. Now come to question number 2. ABC PLC is a trading company. The draft profit for operations for the year ended 31st December 2020 was 98,000 before the following items was considered. Okay. On 1st September 2021, ABC Plus issued a 6% debentures of $2,000 interest payable half yearly. So we have to deduct interest. These are adjusting events. Huh? We have to deduct interest for September, October, November, December, 4 months. Okay. Revaluation reserve 2021, January 1st, 2021, 72,000 arose from the revaluation of a property on January 1st, 2017. The property was purchased on 1st January 2000. It is depreciated using the straight line method, where its useful life of 40 years with no residual value. On January 1st January 2017, the market value of property was worth 432,000. On 1st January 2021, the property was revalued again at 296,000. No accounting entries had been made to record this. If we have revalued or we have devalued actually the value of property, we are not actually increasing the value, we are decreasing the value. So it means we have to consider for the depreciation. Okay, because we do not include any type of revaluation or buying of non-current asset or revaluation non-current asset in our income and expenditure account. It has no impact, but the depreciation should be taken into consideration. Okay. In the financial statement 2020, a non-current asset was wrongly classified with the effect that depreciation had been overcharged 20,000 in 2022 and $14,000 in 2021. So we are here with concerned with only $14,000. Okay. What happened in 2022? Leave it. Okay. ABC PLC sells good at markup of 60%. Okay. On December 31st, December 31st, 2020, defective goods with a sales value of $28,000 were returned by the customer. The cost value of the returned goods had been included in inventory. It is expected if $6,000 is incurred to repair the returned goods, they can be sold at 80% of normal selling price. This is the problem of IAS 2. Okay, lower of cost or NRV. Okay, so we have to adjust the value of closing inventory, and when we adjust the value of closing inventory, it is going to affect the profit. Okay. Prepare a statement to show the profit for the year ended 31st December 2021. Okay. So what we have to do, we'll go for the answer. Okay. So what we are getting? Profit from operations. Profit from operations, that was $98,000. Okay. Then now, first we were talking about interest, debenture interest. Debenture interest is 6% for 200,000. So that makes interest 12,000. 12,000 means 1,000 per month. 12,000 per annum means 1,000 per month. So multiply by 4 divided by 12, 4,000 interest is going to be charged in the year 2021. So we have to deduct it here, 2021. Okay. Debenture interest. $4,000. Okay. Done? So what next? Okay. We have to go for revaluation. Okay. On 1st January 2021, 72,000 arose from the revaluation of a property on that revaluation was done on 1st January, then the market value was 432,000. Okay. Okay. Now on 1st January 2021, the property was revalued at, again, it's not a revaluation, it is basically a devaluation. Uh-huh. Now it's good. So what we have to do here, okay. Now see, when on 1st January, when the market value was 432,000, 432, okay, it was revalued 432,000 in 2017. At that time, the life of property was 36 years. So that means 432,000 divided by 36 years. So it means the depreciation was 12,000 per annum. But in 2021, when the value of property is 296,000, 296,000. The value of the life of property was left 17, 18, 19, 24 years means 296,000. Now the value of property, life of property is 32 years. So the 32 years. So the depreciation should be this year 9,250. But they must have charged 12,000. So 12,000 minus 9,250, 2,750 is depreciation overcharged. So we have to add back. Okay, depreciation overcharged. That is 2,750. We have to add back 2,750. So, now, okay, done. This is done. This is also done. That's it. Now, in the fine system 2020, a non-current asset was wrongly classified with the fact that depreciation has been overcharged by 20,000 in 2020 and $14,000. This is non-adjusting event. Getting my point clear? 20,000 because that was gone. But that 14,000 is an adjusting event. So what we have to do? We have to add depreciation 14,000 in our income this year. Depreciation overcharged. Depreciation on non-current assets over charge. That is 14,000. Okay. Now, next. Oh, this one. Okay. See, the last item. Markup was 60,000. It means 28,000 is the selling price, sales value. No? So what we do, we'll take it, what we call 28,000 multiplied by 100 divided by 160. So 17,500 is basically the cost price of these goods when they were returned at a selling price of 28,000. The cost price was 17,500. 28,000 multiplied by 100 divided by 160. Okay. Because they were sold at 60% markup. 17,500. Now, okay. Now, the cost price is equal to 17,500. Okay. What about NRV? NRV would be, if we spend $6,000, then they gives out 80% of normal selling price. Getting my point clear? If we make, if we spend 6,000, then they can be sold at 80% of normal selling price, not the actual selling price. Okay. So how to calculate NRV? See, 28,000 was the normal selling price. Multiply by 80% is equal to how much? 28,000 multiplied by 80%. 22,400 would be selling price. Okay. So what we do, if we subtract 22,400 minus 6,000, the additional cost, what we get minus 6,000. The NRV would be 16,400. Okay. Now cost price is 17,500 and NRV is 16,400 minus 17,500. 1,100, the value of inventory is decreased. Are you getting my point? 1,100. The value of inventory was 1,100 over closing inventory. We have to reduce the value of closing inventory by 1,100 because of this IS2. When we reduce the value of closing inventory, the cost is increased and profit is decreased. So, inventory over value 1,100. And we'll get the correct profit. Yeah. So what would it be? We can easily calculate 98,000 minus 4,000 plus 2,750 plus 14,000 minus 1,100. 109,650 is the answer. 109,650. This is the answer. Done? Okay. Prepare a statement. Okay. Explain the accounting treatment of the following with reference to the relevant international accounting standard. Item 4, I've told you IS2. Okay. Item 3, that is IS8. Item 3 is IS8. Yes. I made a mistake. IS2 and this is IAS8. IAS8. See, why IAS8? Now, the loss of this 14,000, this one, is adjusting event for 2021. But this is not an adjusting event for 2021. So that 20,000 is going to be reduced from the retained earning balance, retained earning opening balance. Are you getting my point clear? This is IS8. Okay. Now, next. State, okay. Additional information. Equity of AB PLC at 31st December 2020 was as follows. Okay. 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 Now see, what we have to do, we have to make a statement of what they've asked for. Difference between right issue and bonus issue. One difference means right issue generate cash and bonus issue do not generate cash. Simple difference. Okay. Statement of changes in equity, a total column is not required. Okay. So what we have to do, we have to move here. Now, what we have to make headings over here. Ordinary share capital. Okay. No, not like that. Share capital. Heading number 1. Okay. Then retained earnings. Retained earnings. Okay. Revaluation reserve. And what else? Share premium. Okay. Share premium. Okay. And here, right retained 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 earnings. Okay. Now balances. Balances 1st January 21. Okay. Balances 1st January 2020. First balance. Okay. Ordinary share premium, revaluation reserve, and retained earnings. But what we have to do here, we have to be careful. Ordinary share will report 500,000, share premium 86,000, revaluation reserve 72,000, but retained earnings is going to be reported as 192 plus 20,000. That was the event given. What we missed out. Sorry. Yeah. This 20,000. We have to add back in retained earnings. Okay. So 192 plus 20,000. 192 plus 20,000 or 212,000. So here we are going to write ordinary share capital $500,000. Okay. So how much share premium? $86,000 starting. $86,000. Okay. Revaluation reserve $72,000. And retained earnings now $212,000. $212,000. Done? Okay. This is the situation. They don't need a total column here. So, okay. Now what we have to do, we have to move slowly and steadily. Okay. On 1st February, during the year 31st December 2021, following transactions took place. Okay. On 1st February, the final dividend of $8 per share was paid from the 2020 profit. The dividend was paid from the 2020 profit. Getting my point clear? That dividend is deducted from dividend 2020 is going to be deducted from here. Okay. So how much would it be? 500,000 number of shares multiply by 0.08. That means 40,000. So 40,000 will, because this is a dividend of last year, so we'll deduct from the retained earnings. Done? Okay. Second, on March 5, a bonus issue of 1 ordinary share for every 10 shares was held, shares held was made. It is the policy of the company to keep it reserved in the most flexible form. Okay. So when we are issuing bonus share issue, we don't get cash, but we have to complete the double entry. When we issue shares, we have to credit ordinary share capital. So what we debit, we are not getting any cash. So we'll debit share premium. So how much we are issuing? I think 10%. 1 for 10 means 10%. So we have number of shares, how much? 500,000 multiplied by 10%. 50,000 multiplied by $1. So that is 50,000. So what we have to do? Bonus issue. We will add here 50,000. Okay. And we will deduct 50,000 from here. Getting my point clear? To complete the double entry. Okay. On 1st June, 100,000 new shares were offered to public at 180. AB PLC received subscription for 80,000 shares, which were fully paid. So what we did, we have asked people to issue to subscribe for 100,000, but people subscribe for 80,000. So we have paid the shares, we have issued the shares, and they were fully paid. 80,000 multiplied by 0.8. 64,000 is the share premium we received this time. Okay. General subscription. Okay. We'll call it general subscription. Okay. Okay. Share subscription. $80,000 here and 64,000 here should be added. Done. Okay. What next? On 1st September, an interim dividend of 0.02 per share was paid on all the shares held on 31st March 2021. So this was in June. Okay. So we don't include that, but this was in March. So what we have to do, we have to calculate 550,000. 550,000 shares were there before March. 500 plus 50,000 multiplied by 0.02. That means 11,000. Okay. So interim dividend, we write interim dividend, we have to deduct here 11,000. Okay. What next? On December, the final dividend 0.9 per share were proposed on all shares held at December 31st, 2021. So final dividend means we have to pay dividend for okay, for all the shares. Okay. But the word here is proposed. It means it is only proposal. So that is not going to change the statement of, that is not going to change the equity. Okay, that is only proposed. Okay. Now, what we have to do, we have to add profit over here. Profit for the year. Profit for the year, we have already calculated somewhere. That was, I don't remember. Yes, 109,650. 109,650. 109,650. Okay. And one more thing which is left here. That was from the previous part of the question. This one. $296,000. Okay. See how much loss we have suffered on revaluation. See, 432,000 minus 296,000. That means the decrease in the value of the decrease in the value of property is 136,000. But from in these 4 years, we have calculated depreciation, so that depreciation is also going to be decreased. 12,000 per annum multiplied by 4 means 48,000 depreciation. So that makes 88,000 loss. Okay. So how we do 88,000 loss on revaluation? Loss on revaluation. Okay. This loss is recovered from this 70,000 revaluation reserve. But the loss is 88,000, so the remaining loss would be covered from this side. That is how much? 16,000. And now we'll get the totals. Okay. 550, 630,000 total. Then, okay, here 86 minus 50 plus 64, 100,000. 100,000. Okay, here we have to put 0. In accounting, always put 0 like this. Okay. And here 212 minus 40 minus 11 plus 109.65 minus 16. 254,650. 254,650. This is answer. Okay. What next? Anything else? This is the end of question. So we have done 2 questions today, inshallah. There are 6 questions in this paper. Two we will done tomorrow, inshallah, and the remaining two, the last 2 questions will be done on Monday, inshallah. So that's all for today. It's a humble request again to subscribe my channel, because most of the viewers who are watching my videos, they are not my subscribers. So it's a humble request to subscribe my channel. Take care. Allah Hafiz.